While you were sleeping, BlackRock just repositioned $2 trillion into a ghost economy, triggering the largest silent wealth transfer in human history. This isn't just another market shift. It's a coordinated rewrite of the global financial OS that leaves traditional investors holding empty bags. If you don't understand the circular capital strategy Larry Fink is deploying right now, your net worth is effectively standing on a trapdoor. BlackRock doesn't just manage money, they dictate the liquidity of nations through a proprietary AI system called Aladdin that sees trades before they happen. Currently, $10 trillion flows through this single software bottleneck, giving one firm more analytical power than the Federal Reserve and Treasury combined. The recent $2 trillion pivot specifically targets infrastructure tokenization, a process where physical assets like bridges and power grids are turned into digital chips. Larry Fink recently signaled this shift by moving away from traditional ESG labels and toward what he calls pro-growth infrastructurism. This transition allows BlackRock to bypass public stock markets entirely, locking trillions of dollars into private, illiquid assets that the public cannot trade. By controlling the literal plumbing of the world, energy, water, and transport, they are creating a rent-collecting machine that functions regardless of inflation. Donald Trump's potential return to the Oval Office presents a fascinating collision with this institutional momentum, as his America First energy policy overlaps with BlackRock's grid expansion. Despite the public political theater, the underlying financial architecture being built by these titans is surprisingly bipartisan and deeply entrenched. The strategy is simple: own the things people cannot live without, then use government-backed subsidies to de-risk the entire investment. We are seeing a merger of state power and private capital that resembles a 21st century version of the East India Company. This isn't a conspiracy. It's a documented, multi-stage deployment of capital designed to survive the death of the US dollar as we know it. But to see where the money is actually flowing next, we have to look at the specific deal Larry Fink just signed in the shadows. The secret deal involves the Global Infrastructure Partners acquisition, a move that places BlackRock in control of the world's most critical logistics hubs. By owning the physical world, they create sticky yield, a financial term for profits that are guaranteed by necessity rather than market speculation. This brings us to the debt-to-equity swap at a national level, where countries struggling with inflation are effectively trading their infrastructure for debt relief. Larry Fink is positioning BlackRock as the sovereign lender of last resort, a role traditionally held by the IMF or the World Bank. This shift is why we see a sudden global push for smart cities. These aren't for your convenience. They are high-frequency data assets for Aladdin. Every sensor in a smart city feeds information back to the BlackRock ecosystem, allowing them to price energy and transit in real time. Donald Trump's rhetoric regarding freedom cities and manufacturing reshoring aligns perfectly with this need for new, controlled industrial zones. While the political base hears jobs, the institutional desk sees a greenfield infrastructure investment with a 30-year guaranteed return. We are entering the era of Neo-Feudalism, where you don't own your home, your car, or your data, you subscribe to them through BlackRock-backed platforms. This model relies on the permit raj, a system where institutional giants use regulatory capture to ensure no small competitor can ever build. It's a closed loop. BlackRock funds the politician, who writes the regulation, which creates the monopoly, which generates the dividend. The $2 trillion shift into these private markets is a hedge against the inevitable great deleveraging of the public stock market. If the S&P 500 crashes, BlackRock still wins because they own the power plant that keeps your lights on and the port where your food arrives. They are effectively shorting the concept of the consumer economy in favor of an infrastructure economy where participation is mandatory. However, there is a massive flaw in this $10 trillion plan that could cause the entire system to seize up overnight. The Achilles heel of this $10 trillion empire is the liquidity trap, the moment the world realizes these tokenized assets are impossible to sell in a panic. When BlackRock locks capital into physical infrastructure, they are betting on decades of stability that the current geopolitical climate can no longer guarantee. Donald Trump's stance on tariffs and trade isolationism could inadvertently sever the global data veins that Aladdin relies on to manage risk. If the flow of international capital is choked by new borders, the circular capital strategy collapses into a series of local, stranded assets. This is why we see a desperate pivot toward tokenization. It's an attempt to make a bridge as liquid as a Bitcoin, tradable in seconds. If they succeed, your local water utility or toll road will be traded on a digital exchange, fluctuating in value based on global sentiment. To survive this shift, you must stop looking at the price of assets and start looking at the owner of the underlying infrastructure. The goal of the elite is no longer capital gains, it is perpetual cash flow through the mandatory services of modern life. While most investors are distracted by the daily noise of the stock market, the real wealth is moving into private credit and physical monopolies. You are currently being nudged into a digital-only financial existence where your access to the economy can be toggled by the providers of that infrastructure. This is the Great Reset in its most practical form, not a political manifesto, but a cold, hard balance sheet adjustment by the world's largest asset manager. The question isn't whether you can stop BlackRock, but whether you can position your own portfolio to run parallel to their infrastructure pivot. Look for decentralized alternatives and physical ownership that sit outside the Aladdin monitoring net if you want true financial autonomy. The $2 trillion has already moved, the concrete is being poured, and the digital ledger is being synced as we speak. The window to front-run the world's largest wealth transfer is closing. Now you know where the exit is, or if there's one at all.